owner-occupied hard money loans. All right, guys, we're going to talk all about owner-occupied hard money loans, why they're hard to find, and what to do about it. So here's what happened is after the 2008 real estate crash, there's a lot of regulation that came into mortgage lenders because they got blamed with the crash and the fault. Maybe some of that was rightfully so because they were doing what they're called stated income loans. Stated income loan basically is you say what your income is, it doesn't really matter what you say, and they use that to determine how much of a house you could purchase. Now, the original intent with these loans was that it was going to be for real estate or for people that were self-employed, who have a hard time purchasing real estate because of the way tax law happens and the way they're using deductions and everything else, but may have the cash flow to do that. And so that was the original intent, but it got into what was called liar loans, where you could just state anything and people found this little loophole. Well, the idea is that the government was buying, government-backed paper was actually buying these, and Wall Street was buying these that where the loans weren't the quality that they thought they were, and they were getting mixed in with other higher quality loans. And so a lot of these low quality loans. See, the thing is if the lender's willing to give that loan and suffer the consequences, that's great. But if the consequences are being suffered by Fannie Mae or Freddie Mac, which is government sponsored, then we're all paying the cost of that. And the cards come tumbling down, as we all know, back in 2008. Now, enough with the history lesson. Here's the deal. Because of that came out with what's called the Dodd-Frank Act. And the Dodd-Frank basically said that homeowners are not, they need more notification. There needs to be more rules around that. There needs to be more regulation. They need to be more knowledgeable of what's happening. Now, prior to 2008, it was a lot easier to find a hard money loan for owner-occupied because they basically say, if you've got some equity and we'll put up the money and you can make the payments. If you can't, we'll foreclose and take the property back. But since the Dodd-Frank Act in 2008, 2009, 2010, I don't know exactly what year the Frank Act actually came out, but it was a result of the 2008, you're seeing less and less and less and less of owner-occupied hard money loans. And it's because of all this regulation. Because the idea with this is that they're looking at as a homeowner, they want to make sure a homeowner is not taken advantage of. They want to make sure interest rates aren't too high, yada, yada, yada. But with all of that, that increased regulation has taken hard money lenders out of the picture when they're dealing with owner-occupieds. The other thing you're dealing with here is most people don't want to kick grandma out of their house. So if grandma has a loan, that loan is typically with an FHA or a Fannie Mae or Freddie Mac or conventional type loan. It's a big institution and they're used to kicking grandma out of the house all the time. And there's not a lot of emotion, those things around it. Well, when you're dealing with hard money lenders, you're dealing with either smaller institutions or private individuals, and they're giving those types of loans. For me, I don't want to kick anybody out of their personal house, but as far as an investment, I have no problem foreclosing on that. You see, when you jump into the investment realm, you're a big boy and you're saying, I'm willing to take on the risk and I understand those risks, and there's rewards and there's risks, and I get paid for mitigating that risk as much as possible, and I can get the rewards or I take on those risks. I have no problem with taking a house back and something like that with an investment, and that's something that we have to do from time to time. However, I would lose some sleep if I had to kick a little grandma out of her house. I don't really like that. So that's one of the problems you're running into with hard money loans is the increased regulation. There's less hard money lenders that are doing owner occupied. Number two, most people don't want to deal with kicking a homeowner out. Number three you're going to get into is if you have to go through a foreclosure process on an owner-occupied hard money loan, the process is a lot more detailed. There can be bankruptcy files and other things that can delay this process considerably, which leads to the next problem is these hard money loans are going to be very expensive. Even if you can find an owner-occupied hard money loan, they're going to be very, very expensive. And if somebody's having a hard time with their bills, which is probably why they need a hard money loan, they're going to end up probably having to pay more. You see, if they're in good shape, if the owner's occupied's in good shape, they should just qualify for a traditional loan. If they're not in good shape and they need a hard money loan, there's got to be a pretty good reason why they need that, and you're going to have to justify why they can make the cash flow and how they can make those monthly payments. All that's going to have to be documented. So the idea of just like, hey, I can go back to a stated income loan and get a hard money owner occupied loan, that's not going to happen. The other thing you've got to be aware of, there's got to be some equity, because the hard money lender, if they're going to do a loan on an owner occupied, they're going to want to make sure there's some equity, because the length of foreclosing, because of the challenges they can be up against. They want to make sure they can foreclose, get the property back, plus recover any payments, attorney's fees, and make a little bit of a profit on it. And that can be very difficult to do. So most people are looking for hard money loans are people that have financial problems and may not have a lot of equity. And those are two things a hard money lender that's doing occupied loans is going to want to make sure they don't have. They want to make sure there's lots of equity. They want to make sure they have a great way to repay, and there's some anomaly situation where they can come in and help out. But that is going to be at a higher interest rate, which means they're going to have more cash flow to have the ability to make those payments. So I think it's a really difficult thing. It's going to be difficult to find an owner-occupied hard money loan. If you can, be prepared to pay for it, be prepared to have your story, and make sure you've got some equity in the property so a hard money lender that's dealing with owner-occupieds will be willing to do that. If you've been enjoying this video, hit that thumbs up button. It's super fun to do. Try it right now. You're going to like it. Okay, so let's talk about the difference, though. We're talking about owner-occupied hard money loans. We need to talk about regular hard money loans for investment purposes. This is the complete opposite. This is not something that's going to be based on income. It is going to be based upon loan to value, making sure there's some equity in the property, but it's really not going to be based on anything a traditional loan is going to be based on when you're looking for an owner-occupied type loan. This is for investments. So that's the type of thing you need to look at. And if you have some interest in those, check out, I've got a video I've put together, what are typical hard money lender rates. I'll put that in the screen as well. If you'd like to get a copy of my property value analysis so it could help you understand the value of the property, whether that's for owner occupied or if it is for investments, text me your email address to 435-294-0433. Text that email address over to me and I will get you a copy of that. I've also got a blog post, how to qualify for a hard money loan. I'll put that in the comments below. If you're not currently a subscriber, please consider subscribing. Love to have you and help you on a real estate investing journey. Otherwise, make it a very profitable day, and bye for now.